Welcome to all of you. Myself E. Kalachali, Assistant Professor, Wales Institute of Science, Technology and Advanced Studies. Now I am going to talk about Week 3, Lecture 1, Departmental Accounting, Apportionment of Common Expenses, Format of Journal Entries, Sum 1. Apportionment meaning. An apportionment is the separation of revenue, expenses or profit which are then assigned to different accounts, departments or subsidiaries. The basis of apportionment of expenses in departmental accounting, cost apportionment occur when a specific cost cannot be directly identified with one specific cost center. Any cost that does not belong to one department and is shared by a number of departments will be divided among these departments using apportionment. Taking an example of the F&B manager's salary, such as expenses would have to be apportionment between bar, banquet, restaurant, etc. Depending on fare criteria, this could be something like the percentage of the manager's time taken up in each specific department. Other overhead that require apportionment include property rent, water and utility bills, general administration salaries, etc. Expenses such as rent, water and utilities can be fairly shared among departments by using a basis such as square feet per department space. Stock reserve, that is the formula and explanation. Unrealized profit included in unsold stock at the end of accounting period is eliminated by creating an appropriate stock reserve by debiting the combined profit and loss account. The amount of stock reserve will be calculated as these are the formula. Transfer price of unsold stock and profit included in transfer price divided by transfer price. That is the apportionment of common expenses. These are the category included in the apportionment of common expenses. Let's go into the explanations. Expenses and then basis of apportionment. Salesman commission, discount allowed and carriage outwards, bad debits and provision for discount on debtors, advertisement and packing expenses, traveling salesman's salary and commission. It's included a sales of each department. Discount receipt, provision for discount on creditor, freight and duty, carriage inwards, rent, rate and taxes, repair and maintenance on building, insurance on building, heating or air conditioning expenses included in purchase of each department, area of floor space of each department. Depreciation of machinery, repair and maintenance of plant, insurance premium, it's included in value of asset in each department. Workman compensation insurance, canteen expenses, labor welfare expenses, supervision, timekeeping and personal office included in number of workers. Compensation of 2 workers, holiday pay, provident fund contribution, group insurance premium included in direct wages. Lighting expenses, number of light points, area of floor space, electric power, horsepower of machine and production hour. Work manager's salary, time divided by him for each department. Format of journal entry, that is the format of apportionment and stock reserve format. At the end of the accounting year, the following journal entry will be passed for elimination of unrealized profit, creation of stock reserve. Particular and debit or credit side, profit and loss account debit to stock reserve. Being to narrations, being a provision made for unrealized profit included in closing stock. In the beginning of the next accounting year, in the opposite journal entry will be reversed as under. That is the next accounting year journal format. Let's go into opening year of the next year format. Stock reserve account data to profit and loss account. Narrations. Being provision for unrealized profit reversed. That is the sum number 1. It is explained to stock reserve. How to calculate stock reserve method. Goods are transferred from department P to department Q at a price 50% above cost. If closing stock of department Q is 27,000, compute the amount of stock reserve. So, the two departments are included, department P and department Q. The value of price is 50% above cost. Note it down, 50% of above cost. So, 50 plus 100, 150 you should calculate. Okay. if closing stock of department Q is 27,000, if closing, it is not confirmed. If closing stock of department Q is 27,000 means you should find out the stock reserve. It is opening or closing, whatever you want to calculate the department Q's stock reserve value. Okay, let's go into the solution. That is the working note, how to calculate the stock reserve. Working note 1. Department P transfer goods to Department Q at a profit of 50% of cost. So, profit of 50% of cost. Okay. Hence, if cost is 100%, equal to the profit is 50 and transfer price is 150. So, the profit is 100 means 50 plus 100, 150. So, the transfer price is 150. You know the formula. Therefore, the profit of Department P included in the stock value of Department Q is 1/3 of the sales value. What is that? 1/3 of the sales value. Closing stock of the Department Q, that is the solution. Closing stock of the Department Q is if. If means 27,000 Department Q value. So, goods sent by the Department P to Department Q at a price 50% above cost. Above cost means 150. So, here you have to apply the formula. Hence, profit of Department P included in the stock will be 27,000 into 50 divided by transfer price 150 rupees. So, the value is 9,000. Amount of the stock reserve will be 9,000. Okay, I clear? Thank you for patient listening.